Hey, it's Jack from Alphacharts with a state of the market video. Today is April 13th, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, thank you for watching my video. Please like and subscribe to my YouTube channel if you haven't done so already. And let's talk about X. I am on X at Alphacharts365. You can follow me there. I'm posting stuff all week long on that account. I also run a subscriber group. It's $10 a month. You get a load of information all week. It helps you, in my opinion, trade and hopefully make better decisions in the market. I don't tell you to buy or sell, but I will give you my thoughts on what I'm seeing in the market as far as uh, what type of market we're in, as well as annotated setups on things I think give good reward to risk at that moment. So $10 a month. Check me out at Alphacharts365. Getting into our video now. So we had a pretty nasty day again on Friday. So we had this take notice day here, which we started talking about last week, right? So it got us cautious. And then we had all this data inside this bar. And then we had a breakdown here. Now we still held the 50-day. That's a positive. But we did break below this bar. That's the negative, right? I think, we have to say that for now, the bears have the ball. We don't know how much lower this is going to go. It could go, to this 490-ish area. It could even potentially go all the way down to, with 475-ish or even 470. All right. So that is, what I'm looking at here. But I think right now the Bears have the ball. Last week we talked about getting cautious. And for this particular scenario that looks like it's unfolding. Now again, we don't know. Maybe this is a false breakdown and we come right back up into the range on Monday. That happens, well, that's again still neutral, back to neutral, until we break higher from above 525-ish. Right. And at least that's the way I'm looking at the markets right now. Let's look at the RSP right below it. I love that. Let's go. Here's RSP. Now, RSP looks very, very different than the S&P 500, right? When you look at the RSP, we have this very defined area where we broke out and price is below the 50-day on the RSP. And again, that is more cautious than, I'm not only cautious, but I think, even bearish. I think, 158-ish is very possible. Just wondering what would that be top to bottom? That'd be around a 6% pullback. And from here, it's not really that much more, another 2% or so. But I think that's a place where we may start to see some buyers start to show up. That's very, very possible. And if that particular breaks, then obviously the 200 is at 152, and that's another spot. Okay. But again, not a good look. And I don't like that it tried to break out and couldn't. Now we have to watch, see where do buyers actually show up. Again, my first thought would be, 159, 158, somewhere around there. Looking at the Qs, we had this beautiful cup and handle, broke out, very strong trend. And now we have this. And there is a budding head and shoulders. Again, I don't care what you really call this top, but toppy, sneaky distribution type of situation. Again, it's kind of a head and shoulders-esque. If it breaks the neckline, 433-ish, then it would confirm, and you could say, okay, we could do a measured move. But right now, Qs are still above the 50. 50 is going to start to flatten real soon. These are already basically completely flat for the most part. And yeah, I mean, talk about indecision in the market, right? This is a great picture for indecision. Looking at the equal weights, and you can see a much different picture. It never broke out to all-time highs, and it is now breaking down below the 50, and it has broke down below the 50, and all the moving averages are really starting to turn lower as well. 50 is flattening. And retest of $80, $81. Yeah, I think that's very possible, right? A retest of this particular breakout right there, roughly $81. I think it's very, very possible. And that's what, about 9% lower? 6% lower, right? Not as much as you would think. It's on the equal weight, of course. Very possible. Let's look at the mid caps. Holding this 530 and right at the 50-day. Again, this is the prior breakout, big spot. If this falls below, I think that there's bigger problems in the market. And looking at IWM, also below the 50-day, looking like it wants to move lower. So you see, this was a broad-based selling program that just, yeah, and it may not be done yet. That's what we're seeing from these indexes. Let's look at XLF. XLF got to all-time highs right here. Earning season has started as well, but you see it's now below the 50-day. That's not a good sign. Did it rather quickly too, right? Escalator up, elevator down. Again, I don't know where it's going to. Maybe 38, maybe 37, somewhere around there. That's about where the 200 will be. Again, that is what I bet you 5 or 6% lower. Let's take a look here. All right, maybe a little bit more, 7% lower. Very possible. SMH. Now, semiconductors holding up better than most, has this little kind of little flaggy area going, hasn't broke the flag, but still above a rising 50-day. So it looks a lot different than what we've been seeing, which is either testing or below the 50-day. So that is a positive. And I think it has a lot to do with NVIDIA, right? Big percentage of, let's just take a look what percentage it is. Let's take a look here. NVIDIA, where are you? There you are. Yeah, 20%. So NVIDIA is 20% of the index, and it's holding up better than most. So that explains a lot here, because if we look at the equal weighted, it looks a lot different, right? So here's equal weighted, trying to break out, couldn't quite make it to all-time highs, and now made a lower high here, and it's trying to break down. It's still in this channel. But a break, it's below the 50-day, not good. Retesting this breakout, so we'll see what happens there. And again, 210-ish. That's that's where this general area is, right there. 208, 210. It's about 5% lower. So that's a place where we should be watching, I think. But again, the equal weights tell the story better than cap weighted because of the NVIDIA effect. Looking at IYT, these are transports. Again, trying to break out to all-time highs, very similar to XLF, right? And quickly got below the 50 and is moving much lower and broke this general area right there as well. Again, may have a date with the 200. Equal weight transports already at the 200. We talked about this trend line being potentially important. I was real happy when I saw this, and then it reversed immediately. That's not a good sign, and it continued lower. So equal weighted transports right at the 200, which is held here and here. Question is, does it hold here too? And look, it's starting to flatten too. So flattening 200, price gets below that could be a problem. ITB, again, price below the 50. Look how fast, we talked about it, about how the 50 was catching up to price on all these charts, and how it wouldn't take much for price to fall below the 50. And ITB is a great example of that. Home builders were one of the strongest. And now we have, again, price below the 50. And XHB is right at the 50. Okay. So overall, a lot of bearish looking charts. Is it done yet? We don't know. It may just be getting started. We may have another, leg or two, depending on earning season, depends on geopolitical risks. All we can do is follow the charts though, right? And right now the charts are saying at the very least cautious, if not, a bearish hint to it. Let's go into the internals and VIX. You see the VIX got above my 16.5 level. And again, how it gets there matters, almost straight up, that matters, right? I would, once it gets in this area, I would consider it maybe a contrarian, bottomish. We'll see. I'm not calling anything yet. But call rate, no, let's do credit spreads. So if we look at the credit spreads, again, they are not blowing out. So I think that this is more of I don't want to say a run of the mill, but a normal correction within the context of a larger uptrend. So again, bearishness should not be like, hey, we're going to be crashing. I don't think this is saying crashing. So keep that in context, right? Percent of stocks above the 50-day down to 37. I think we go lower here still. I think there's room to the downside here. A few more days and we'll be in this, 20 to 30 range. I think that's a good spot. The lower we go, the more confidence I have that we're getting closer to a bottom. And then put call ratio. You see there's no real fear yet in the market, right? And so again, I think we have lower to go. So that's what the internals are telling me, that there's room to go. Now let's look at the dollar. Here's a dollar spiking. We talked about that. I think that dollar above the 105 is a big problem, and it's showing in the charts. I think we got to 107. So I think there's again room to the upside to cause more aggravation, more bearishness, more downside push. But 107-ish is where I'm watching for maybe the buyers to start to show up or things to start to stabilize at least. What else am I looking for? TNX, I think there's room to 5. I think we're at 4.5 right now, 0.5%. I think it's very possible and even potentially likely that we get to 5% again, maybe even a little bit higher. It's very, very possible. Let's look at the value line geometric index. I don't always look at that. Let's see what's going on here. I like to look at this on a weekly. Let's do a line chart. And you can see how things started to break out and above the 600 level. And I think we could be bullish for sure. And now we're back right in a range, right, in the value line. And yeah, below 500, and we got big problems. But right now, I just think I think we may come to near the bottom of this. I think that's very, very possible. But right now, I think we're just in a range. But in 500, 495-ish, that is the big spot. Let's go to the monthly. You can see how it's a big spot going back to 1998, right? So we'll watch that area in general. I don't always look at the value line, but I probably should more, right? And I've told you this chart, XLK, SPX, a million times. Again, while we're doing on the monthly, we should watch it. Why I think that technology, at least for the short term, next few months or so, may not be the best area for us to put our money. We'll see. If it breaks out above here, then I switch gears. But as long as we're below this general area, I'm not a fan of technology in general, even though we did see a little bounce back here. We still made it, we'll see what this continues. I wouldn't be shocked if we get down to this little supportish area right down there, and that could be a spot where technology could take back over again. We will see about that. Okay. So don't forget, come join me on X at Alphacharts 365. Going back to the charts, I think that we need, at the very least, need to be cautious, raising cash and being very, very careful in this market. Again, can it turn on us? Absolutely. We'll be flexible in that respect, right? If it gets back into this area, then we go back to more of a neutral and less bearish stance. Again, but for the short term, intermediate term, I think a little bit of a bearish posture makes sense. All right. Hope you all are doing well. Check out my stocks to watch. Will be out tomorrow. And please like and subscribe to my YouTube channel. Have a great day. Bye-bye.